finally, this entire week and a half of just choppy price action finally got destroyed because of CPI data that came out and it was pretty bad. And now we are capitulating. So it's really, really good that we're basically out of that range. Thankfully, we're back down to 390. In today's video, I'm going to talk about the next steps, especially this week. It's going to be very, very important for the entire market, the SPY, the NASDAQ, the IWM, the crypto markets, all that good stuff. So without further ado, let's get started with the video. Number one, guys, I have 5,000 subscribers now on YouTube. So, please, no autographs, if I see you guys outside, please just be cognizant of, like, if I'm outside walking with my family and my friends and stuff like that, just please be cognizant. There's a respectful way of approaching people as well. Please just don't run up and be like, oh my God, is that Hamid Trades? Please, can I have your autograph? I'm a normal person. I'm getting used to all of this fame as well. So yeah, man, just be patient with me. I'm going to be patient with you guys. And all right, let me stop. Okay, so okay, all right. So, all right, no, but for real. So the two main important things that are basically going to happen next week is Wednesday, we're going to get the federal funds rate. So we're expecting another 25 basis point hike and a 50 basis point hike, right? And then an FOMC statement, the minutes, right? And then on Friday, Fed Powell speaks. So again, this week can potentially be a bit choppy, right? Obviously, we have this direction. This basically shows that it's a high likelihood that in July, when the numbers come out for next month, for quarter two, we're most likely going to be in a recession. So those numbers, let's see how much of that gets baked in before that number hits the market, right? That's going to be very, very interesting. So basically in July, the last three CPI data that we've gotten have just been making sure that the first set of data that we get, it's the preliminary data. The second time we got that core CPI data, it was basically to see if the preliminary data was accurate. So it was checked by another organization, basically. And then the third time, it was triple checked, essentially. So, so in July, when we get that preliminary data, it's going to be very high likelihood that we're going to be in a recession. And basically, a recession is when GDP stagnates 2 quarters in a row. So that's obviously not going to be great for the market. Depends on how the Fed responds. But really, it's a blessing that we're finally out of this range. But again, Wednesday and then Friday, those are going to be very important, choppier days. And that's why this week is going to be a bit choppy. So we're back down to 389. All right. What we know about this market is that it's been range bound. All right. So we were up here at the top of the range. We could never break above it. We went short, worked out. But now, are we going to hold these levels of support, or are we going to continue to buy into these shorts and hope that the downward momentum breaks through? Now, from a trading perspective, like I was saying, longer term bears wanted a bounce, right? And this was the bounce so far that we saw, right? We never made it to 420 to 430. We only retested this high at 417.50. And we were never able to even break above that. So this was a really good opportunity for longer term bears to get back into shorts. Now, obviously, longer term bears and people like basically smart money is not entering heavy into shorts down here. It's still a range bound market. So what people are going to be hoping for is they're going to be hoping for a bounce intra-week, either Wednesday when the interest rate data is back on par with basically what expectations are. So if we've been having 50 basis points hikes this entire time, and then we have another 50 basis point hike, expectations are going to be 50 basis points. And when the 50 basis points come, it's going to be good for the market because people expected it, right? The reason why the CPI data and the market fell on CPI data is because it was much worse than expected. So Wednesday, people are going to be expecting probably a bounce, right? Friday, hopefully something like that, maybe like another bounce, because this is not a good opportunity to go short here. You should have been accumulating short, and you should have went short up top. And since we know that this is a range-bound market, range-bound markets hold support usually, and then they bounce to resistance. And you basically have to play the support and resistance levels. You can't expect momentum to break through like butter, right? So especially in choppier range-bound markets, there isn't usually a lot of great follow-through to either the down or the upside. So intraday, oftentimes you can see that the market does not want to easily break above resistance, and it doesn't easily want to break above support or break below support. So now essentially we need to see if 387 holds. If 387 to 388 holds, then this, the 385 is going to be the major level of support. But again, like this 393 level on the SPY is very, very important. And I believe that anything below 393 is basically very bearish. So intraday, whenever, right? If we start breaking above 393 on the SPY, then we can start leaning long, in my opinion. Or since we're in a range-bound market and you have a bullish bias and you want to try to catch a bottom, it's a higher risk, but it's you have more reward if you are to buy at support. So you can buy at support and hope that those support levels hold, instead of buying as the momentum breaks above levels of resistance. So yeah, I mean, we just need to see how the market responds next week, Wednesday and Friday. We saw 2 huge down days, right? To expect another huge down day is pretty unlikely, right? But of course, if that happens, that'd be great for everybody, because we could make money either way. So that's very good. But yeah, this was some pretty crazy price action. But as you can see, we're still not even close to the lower Bollinger Band yet on the SPY. So the lower Bollinger Band is still at 385. And that is pretty frightening, because the lower Bollinger Band is it's pointed downwards while the market is capitulating as well, which is showing that there's still more room to go to the downside. So that would be beautiful. And again, the safest time to go long, especially in a bear market, is when we are very, very overextended to the downside. That's the best time. And I would argue that we are kind of overextended. Currently, we're due for a bounce. We're down approximately 6%, 6.23% for the past few days from their highs. So I would argue that, we are kind of overextended. We're due for a bit of a bounce, and that wouldn't be completely out of the norm. So I'm expecting a little intraday bounce Monday. But if Monday we continue to, if Monday at the open we continue falling very, very sharply, I believe that say for example we open flat for some reason, we open flat, and I think the most bullish case would if we open flat and we fall down to 387 just automatically, like at the open. I think bouncing off of 387 is a very high likelihood. So I could be wrong, but I'm saying this Sunday morning, all right? But this would be very, very unnatural. It would be a very unnatural downward move, and people want to catch. You have to understand that when people are deploying hundreds of millions and billions of dollars to the market, they want a chance to deploy their capital. And they can't deploy their capital if the market is moving in a specific direction that they want it to before they've deployed the capital. So they want as many chances to basically enter as possible. So that's why I believe we should have a bit of an intraday bounce. And it's completely possible as well. During these market conditions, we're going up and down 10 points a day. So to say that something like that is not possible is just ludicrous. It doesn't make any sense. That's how you know it's ludicrous, because I use the word ludicrous to explain it. Anyway, And then of course we have a gap all the way up to 401.44. So if we fill that gap, that would be pretty amazing as well. Watch for the gap. The gap starts above 395.78 on the SPY. So once we're above that, then there's about a 6-point move, 5-point move to fill that gap. So that's a pretty good gap to fill as well. But that's really my thoughts. We could take a look at, so Apple is much closer to the lower Bollinger Band than the SPY. We can see that it's trading at 137. We can see Tesla is nowhere near the lower Bollinger Band. Amazon is nowhere near the lower Bollinger Band. Neither is Google, nowhere near the lower Bollinger Band. Microsoft is getting a little closer. So Microsoft and Apple are very close compared to the others in terms of the distance away from the lower Bollinger Band, which is showing that things are getting close to bottoming out, in my opinion, in the short term. So that's why like there's a higher likelihood that we get like an intraday bounce. Not saying that even after we get the intraday bounce, the direction is still should be pointed lower. But the only reason why that becomes a bit of an issue is because these the statements on Wednesday and the Fed or Powell speaking on Friday, those are enough reason potentially to give the market a nice bounce. And then overall, every single bounce, every single thing that we basically get is a shorting opportunity. So don't lose the grand vision of things. Whatever happens intraday, yeah, we could go up or down, blah, blah, blah. But the market in general is very, very bearish. Things are still very, very bad. And inflation is high. You're walking around, you're worried about, obviously like people are worried about paying for stuff. So how, unless the Fed starts printing more money and, something fixes in terms of inflation, the market is going to continue falling. So every single time we have and the fact that the SPY could not even break above 420 is very, very bad, in my opinion. Like the SPY should have been able to bounce to 420 to 430, but we couldn't even break above 417.50. And I bought into a light position, thinking that like, okay, yeah, this is my first scaling in opportunity. I'm just gonna scale in at 416 or whatever. It was like 416. I scaled in. I was like, yeah, I'm just gonna scale in at 416, whatever. This is gonna go to 420, 430, whatever. I'll scale into more. Nice little starter light position. I didn't know that was the top. Like, if I knew that was the top, I would have deployed more capital. But I mean, yeah, man. The fact that it couldn't touch 420 is very, very bad. But yeah, so regardless, we see these large tech stocks, they're getting closer to the lower extensions to the downside. So it's a good sign. The IWM is also not close to the lower Bollinger Band. And you can see that the lower Bollinger Band on the IWM is actually sharply bouncing, which is good. And we also see a comparison between the IWM and Amazon, where Amazon is not trading as similarly to the other large tech stocks. It's also trading, similarly to what the IWM is doing in terms of strength, which is pretty cool. Now let's take a look at what's going on with the crypto market. All right, let's take a look at Bitcoin. So obviously, so this is a older chart, but I don't have any major level of support on Bitcoin until about 23,500, and we've broken through multiple major levels of support. The last key major support was 28, and then we had a bit of this over here at 27,750. But we can see that we're below both of those levels. Ethereum is the main thing that we're basically looking at here. So I took a small Ethereum position. Let me delete this for the sake of the video. And you can see that on the daily chart, it's opened and closed outside of the lower Bollinger Band. So we're very, very overextended to the downside. Obviously, Ethereum is going through a lot of it's not good what's happening with Ethereum at the moment, and that's why the entire market and everything is taking a hit. But it's worth taking a stab at a bounce, because if this bounce doesn't work, it would just be inhumane. If this bounce, if essentially we don't bounce out of this extreme overextensions to the downside, which I think we should at least bounce to like at least 1,500 or most likely back to 1550. That's what I'm banking on. But if we don't bounce and we continue to fall, I'm not sure. Like, I personally can't see that happening unless we open at like 6 p.m. when futures open and we like limit down and we gap down. That would just be ridiculous. That is when I will start to, if we limit down and we like really start to fall very heavily on Ethereum and we don't bounce during the day, like while I just put the trade on, I am most likely going to start buying dips like very heavily. And most likely buy some leaps. Probably add to spot a lot more as well, because if this starts capitulating and if this starts falling very heavily, a lot of hedge funds and banks are invested in Ethereum. A lot of people in crypto are invested in Ethereum right now. And if Ethereum starts falling, people are going to have to liquidate other things to keep these positions afloat. So say, for example, if someone is long a bunch of other crappy altcoins and they're also long Ethereum, they don't want to get margined out of Ethereum. So they're going to sell their other positions. They're going to make sure that they can have capital in place to maintain their Ethereum position. It's going to be pretty bad. And I think this also has a lot to do with what's going on with Luna. A lot of it is all just very connected, and the crypto ecosystem is pretty new to mainstream as well, because a lot of banks and hedge funds have just entered the space in the past few years. So there's a lot of just stupid money around as well. So yeah, essentially we're playing for a bounce. If we don't get that bounce tomorrow, ideally the best bullish case in my opinion would be a super just a drop down to maybe like 1300. I don't see that happening, to be honest, but if we do, that'd be great. And yeah, that's really it. I mean, I gave my thoughts on the overall market. Crypto markets should see a bounce intraday in the next 7 or 8 hours, hopefully about like $100 bounce. That'd be nice. If not, I have a stop loss a bit below today's low. But yeah, I mean, overall, this is another chart that essentially a lot of hedge funds and everything we're looking at. So back in November of 2021, a lot of hedge funds and banks that were just newly introduced to Ethereum, and they were just newly introduced to crypto. So I'm talking about like family offices, rich people, like 9-10 figure net worth, like hundreds of millions of dollars to deploy to crypto, right? So fund managers and stuff were basically showing this chart of Ethereum, and they were like, look, we're currently in a downtrend. This is going to be, so you see how this green line, it was one of the highs, right? So they were like, look, we're in its downtrend, and you know, this is a really good opportunity because things are falling lower, and people were bullish over here, right? So if people began to buy in at the end of December, right, and people were just introduced to Ethereum over here, so right here, they were buying as this trend line was touching, right, and they were looking at this trend line as well as a triangle. So they're down heavy on Ethereum at the moment. They are down heavy on Ethereum at the moment, right? So they probably bought more dips, and now they're probably going to buy more dips if they have more money, and if depending on the quality of the money manager with them and that was giving them the stuff. But basically, one of the reasons why is because Raoul Pal shared a chart, and this was a trend line. So he also introduced a lot of hedge funds and banks to Ethereum as well. So they're looking at this trend line as well, and the fact that we just crossed below that trend line is pretty bearish. So you could see that it was a downtrend line. It acted as resistance, support. Essentially, we broke above it, acted as support, We broke above it, right? It was acting as support this entire time, right? But now recently we just broke below it. So, yeah. So obviously this isn't bullish. I'm expecting a bounce back to the trend line. Essentially, that's why I went long. It's worth taking a stab at it. We're opened outside of the lower Bollinger Band. It's worth taking a stab. We have stop losses below the lows. If intraday we start capitulating even lower, I'm probably gonna go long again. Overall, I mean, yeah, I'm probably just gonna scale into more longs if we hit a little below the stop loss and we start moving upwards. But yeah, essentially I'm playing for a bounce back to the trend line, or at least back into the lower Bollinger Band, and I think that should work. But aside from that, that's the holistic view of what I think is going to end up happening in the market. I hope you guys enjoyed today's video. Yeah, and I will see you guys tomorrow. Thank you.